Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at MarketSite, we have Tendayi Kapfidze. He is the chief economist over at Nasdaq-listed LendingTree. It's great to have you back with us at MarketSite. Happy New Year. Let's get your 2019 housing and prices and sales outlook. We have a lot to cover here. You're saying right now housing is in a beautiful slowdown.
Yeah, I think it's going to be a happy new year for housing as well. The way I'm looking at housing right now is we've actually had a pull-off in rates, right? So towards the end of last year, there was a lot of concern about the housing market because of where rates had gone. And we had seen sales slow down, housing starts slow down, all the big housing indicators were slowing down. And then we were starting to see prices come off a little bit. And I think that was exactly what we needed in the housing market at that time, because of affordability was starting to be a real challenge.
Right, because as prices accelerate, you lose deceleration in terms of who can afford to buy homes. I mean, we've seen that pullback, especially in our local markets. I would imagine the dovish conversation that we heard today with Powell, Bernanke, and Janet Yellen, that certainly had to have put a positive spin on that with interest rates. Sounds like it's dialed back a little bit.
Yeah, exactly. So the way it translates into activity in the housing market is that most buyers are budgeting a monthly payment. And as prices go up and rates go up, that monthly payment can purchase less house. And so you get some buyers actually falling out of the marketplace. So what we see is as home prices slow down, and some of the dovish conversation that we've heard today, rates are actually coming down. So that's making homes a little bit more affordable at a time when we're actually starting to see some supply come back. So it's looking like a good setup for the spring.
Well, it's great if you're a buyer. It's definitely a buyer's market right now. For sure, I would imagine with that.
Yeah.
So it sounds like medium and long-term housing prospects are good. That's the way you're looking at it.
Certainly, the short-term prospects are good because rates have come off about 50 basis points since November. And the medium and long-term prospects are good because the demographic demand is really there for housing. So millennials are increasing as the share of home buyers. Between 30 and 40% of homes are now being purchased by millennials. And the average age of the millennial home buyer is about 29 years old. So there's a lot of demand, a lot of years of millennial demand coming for the housing market.
All right, and to wrap up here, I want to pick your brain a bit on GDP expectations.
Yeah.
Now, yesterday on CNBC, I'm sorry, I can't attribute it to who, but they said for every 2 weeks that the government is shut down, it can impact GDP by 10 basis points. If that continues and snowballs, I mean, even 25 basis points can really impact the market psyche out there.
Yeah, absolutely. So the way the translation mechanism is, the government is a relatively small part of the economy,
right,
but what it affects is confidence. So consumer confidence will start to come down. Business confidence will start to come down. And we've seen some effects on business confidence from the trade troubles, right? So if you add to trade, you add this government shutdown, you're just creating a lot of noise that affects people's confidence, and therefore they start to pull back a little bit, and that is what might take some of the shine off the growth numbers.
Because even going into December holiday 2018, the consumer looked incredibly strong. They broke records in terms of spending, so you really don't want to see deceleration there, considering people think the economy is pretty good.
Yeah, and we got a really good jobs number this morning. I mean, really a blockbuster number. So the economy is in a good position right now. And we need less of this kind of political volatility coming out of Washington to, sustain the economy.
All right. Thank you so much for joining us. It'll be interesting to see where we are next quarter for sure.
All right.
All right. And thank you for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.